If there was one week that was going to decide what happens the rest of the year, that is this week, my friends. And we're going to take a look at exactly what I mean by that, because what's happening right now is, depending on how this week ends, that is the beginning of the potential next 30% down for Bitcoin. Now, this can be invalidated depending on what happens by Sunday. But this signal is something that we saw in last cycle that led to an additional 30% decline in the markets from where we are right now. So you have to be prepared for that. So let's look into the charts and get right to it. All right, guys, welcome back to the channel. Not financial advice. And a lot of people confuse what's going on here, that this is necessarily my opinion. And here's how technical analysis works, okay? It's how I look at it. It's the study and psychoanalysis of the markets as a whole. And simply all we're doing is looking at the past, because all these squiggly lines that we're seeing on the chart, AKA candlesticks, AKA price action, is just a painting exactly how all market participants reacted under certain scenarios, okay? So we can look at the past and see exactly how everyone, hedge funds, everyone included, algorithms, bots, retail traders, the biggest money that is involved, exactly how they all reacted under certain circumstances in the market. Then we can take that information and forecast it in the future into today's present situation and build a game plan or thesis about how will the market as a whole, the entire neural network, react if that same situation arises again. And we're seeing that same exact situation arise again right now. So let me tell you and explain exactly what I'm talking about. There's multiple factors to be considered here. Let's just start off with the 50-day moving average, okay? Let's take a look back at the previous bull market cycle and see how the 50-day moving average became a significant source of a telltale sign that the current run was over, okay? Here's basically what happened on the last cycle. We saw the initial breakout right around this level, beginning of the bull market right around here. We see the 50-day moving average pumping up, retest, 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 broken 50-day moving average followed by a decline, retest and reclaim the 50-day moving average followed by the secondary test or secondary break of the 50-day moving average, followed by breaking down that low, which then led to an additional 34% decline. Even more than that, that initial run was 34%. It actually dropped about 40% from that actual breakdown. So from this analysis, we can see that the first and secondary break led to the first initial very major pullback in crypto after the cycle had ran from the breakout point about 203 days or 203 bars, okay? So that's just the cycle right there. Obviously, there was a secondary pullback and then another run before retesting those highs and then seeing a pullback. So we're just going to look at this analysis right now of this being the first major run, of which right now we're seeing that first major run, okay? So if we look at the chart here, we saw pretty much the similar bull run breakout here, starting about right here at about 30K. We have the first initial breakdown of the 50-day moving average right here, the reclaim, and now the secondary breakdown of the actual 50-day moving average, okay? And right now, we have no idea what's going to happen, what the future entails, because it hasn't happened yet. So we have no idea. But looking at what happened in the past on that secondary breakdown, reclaim, retest, secondary breakdown, another 40% from that drawdown right there. Brief interruption here, guys. Did you know that 75% of traders have accounts under $25,000? This creates a huge problem because even if you double that account in a year, which is almost impossible, you're still only making $25,000. Introducing Hydra Funding, where you can potentially get access up to $500,000 in capital. All you have to do, guys, is sign up for a challenge account, which is going to give you potentially access up to $500,000. And if you earn a 10% profit in this demo account without going into a 5% loss overall or a 4% loss in a day, you will then pass their evaluation phase and yes, get access to an account with the selected size account. And now, instead of trying to double a $10,000 account, you could potentially earn only 10% on a $100,000 account to earn the same level of profits. And the benefits of this are huge. Rather than risking your entire $10,000 on one account, you can use just $1,000 to potentially get access to $100,000 in capital. You can trade crypto, Forex, stocks, CFTs, gold, oil, everything under the sun, all on MT4 and MT5. If you're interested, if you have an account under $25,000, like 75% of traders out there, you're not going to make any money with that account because it's too small. Get access to pro-level funding and pro-level capital with Hydra Funding. Link's going to be below. If we look at how long it's been since the actual breakout to the secondary breakdown, it's been even longer than last one, right? So this run lasted actually longer. Or no, shorter. This was 203 days before the breakdown. This one has been 234 days, 238 days so far. Okay, so we're even farther extended into this actual run than we were on the previous one back here. Now, some subtle differences is we do have a little bit longer of a consolidation period up at the top, right? This consolidation period was a little bit shorter. This one has lasted a little bit longer, but you can also argue this is a clear double top pattern formation. And so, yeah, it's not exactly looking that great just from that perspective. Okay, so that's the 50-day moving average perspective. Let's look at something else. Let's look at a longer term time frame here. Okay, let's take a look at the weekly chart here and see how this played out. I have an indicator called Degener Trend. It's available for sale at degener8.io, link below. We can see as soon as the Degener Trend broke down on the weekly chart right here, that was the beginning of the first major pullback to the downside. We can also see that the weekly pivot low, as soon as that was broken down as well, that was the beginning of the first major pullback, an additional 30-40% pullback from that initial, however many weeks this was, 204 days, initial huge bull run before we saw an actual major pullback before it actually did a secondary. We're now at the same situation right now, where we are breaking below the weekly pivot low here at about 61,480, 61,440, 450. Probably depends on which broker you're looking at. This is the Bitstamp, but we can look at other ones as well. They're probably somewhere around, give or take 100 points at that level. And we can see, obviously, it's only Thursday at the moment. We still have until Sunday before the weekly candle closes. But a close below this level on the weekly chart is going to be a very bearish indication that this could be the next breakdown for another big push to the downside on Bitcoin. That's one signal. The other signal is obviously the weekly Degener Trend breaking down here, which is currently at about 61,750 to break down that level. Obviously, there's still 4 days, however many days left in the week, and this could change. But I just want to give you guys a heads up before this happens to kind of understand that this is how the entire neural network of traders reacted in the past. This isn't an opinion that this is going to be the end. We're seeing 40%. This is just an analysis and observation of exactly how all market participants reacted to this pretty much very close to exact similar situation in the past. So a lot of people think this is like my opinion, or like this is what I'm saying is going to happen. But that's not how technical analysis works. Technical analysis is just an analysis of past human behavior under certain situations, and how can we relay that information into the present situation and build up a thesis and game plan about, okay, how can we trade this based on how this neural network of traders, not just retail, not just institutions, but everyone involved, how did they react under that same situation? And right now, we're in that same exact situation where we could come back and break down these levels, right? And we could see that it actually, on the weekly chart, retested the 50-day moving average. And we can see the weekly moving average here of the 50-day at about 46K, which would actually line up to about this level here, this weekly pivot. But we could see what happened on this actually pullback to gauge where this actually even stopped, where the selling kind of stopped was at the weekly pivot from this pullback, this weekly low close, which is about 32,000. We can see a bunch of wicks into that level, but that's basically where it stopped. If we look at the similar setup here, where we would see the weekly pullback here, that would bring us back down to about 41.5, okay? And that is currently from price action right now. Closing price, that would be about 32% pullback, right? So anywhere between 46.7 to 41.250 or so, or 41.400 is an area where if this does confirm this breakdown, that's probably a pretty good place to be buying Bitcoin if we do pull back. And also should be concerned about your longs if this does confirm that that's where we could be going. And are you going to be okay if that situation does pan out? Okay, so there's multiple factors inside of this that are signaling this potentially happening. It doesn't mean it is going to happen 100%. Obviously, history often rhymes, but it's never exactly the same. And we also have 3-4 more days, Thursday, Friday, Saturday, Sunday, 3 more days until we see if this is confirming, right? If this closes below this level right here, this weekly swing low, which is about 61,467, it could easily bounce off these levels over the next 3 days and then close above it. And this is what? This is support. This is a support level. Okay, but if that level is taken out and closes below that by Sunday, that is going to be a weekly bearish signal on multiple signals. We've already gotten the daily bearish signal based on the 50-day moving average. That's already broken down. Now this is a weekly signal, which is even stronger and an even longer term bearish signal, which is definitely something to be concerned about. Okay, obviously there's going to be people that don't want to believe that this is a possibility, but you don't have to believe me. This isn't my opinion. This is just exactly how price action reacted in the past. Okay, so it's definitely a plausible scenario that could be happening. And for me, I don't give a shit about hoping for the best. I only plan for the worst so that I can live to see another day and I don't wipe myself out in the process of trying to make money long term. So that's a factor. But now let's take a look at kind of the intraday shorter term for the bounce. If this is in fact a support level and we do bounce from here, what are the things that are gonna want to see to potentially even buy into a bounce for even a short-term trade, or even this could be the actual trade that leads to the all-time high breakout. So first and foremost, if we look at the daily scale, we do have a low here and a higher low here. So that is somewhat of a good sign as of right now, as well as this is the weekly, this line right here, that is the weekly closing bar. And so we want to see price close and hold above this at the end of the week. So that is a pivotal level that we need to see happen. Okay. Now we also have the 50-day moving average up here. We have the degenerate trend on the daily that's up here, and both those levels are now resistance, right? So this is going to be a major resistance level at about 66.3-ish, 66,000, give or take 1,000 points in that zone is major resistance. So for a short-term trade, if we look at the 4-hour chart here, if we close above 61,960 or 62,000, that is a buy signal for me. For the breakout here, and then as long as we remain above this high at about 60,800 on the 4-hour chart, we could easily just come back and retest this level, which would be a buy dip opportunity, and then break above this trend. I think that is a short-term buy signal for a potential bounce into the 66K zone to lock in gains into that resistance level, and that is looking like a very promising short-term trade on the short-term time scale. Okay, now it depends. If you want to look at it at a longer term, now, that can be a short-term trade for both us closing below this level as well as closing above this level on the weekly chart. Because just because we close below that level on the weekly chart doesn't mean it's just going to go straight down. A lot of times what that is a change of structure, and you might see the actual pullback into the resistance from that level, then create a lower high, and then the next level down here. So even if we close below this level, that doesn't mean that we can't see that bounce to the upside into about 66K and then see the next leg down. But if we close above this level, that's going to be bullish for the week. And I do think that that could lead to, on the intraday 4-hour chart, this being a buy signal above 62K, which also breaks this descending trend. And that is going to be a very bullish signal to go forward, retest the 66K, and even potentially up to 71.5, and then actually break to all-time highs. So that's kind of the situation here. If we get a weekly close below, what is that price? 61,600, 61,400. That's going to be bearish, and I would potentially long, but then I would be shorting or getting ready to sell into 66K for the next leg down. If we close above that level, this is going to be a buy area, and especially if we break above 62K, that is a buy signal to potentially go into 66K resistance for a short-term profit, potentially the longer-term breakout above the 70Ks, and we are just off to the races, potentially 80 to 100,000. So multiple scenarios here that can happen, guys. I am not one to say, here's what's going to happen. Every analysis and every chart I look at, it's either A or B. Those are two things. If A happens, I will do this. If B happens, I will do this. It's not if A is the one that's going to happen, that's where we're going, and we're all fucked if I'm wrong. Okay? That's not how survival in this game works. It's if A happens, let's execute this plan, and if we're wrong, then we try to minimize the loss for being wrong. If B happens, let's execute this plan. But if we're wrong, let's minimize the losses if that is in fact wrong. So many traders out there don't do this. They pick A, and if they are wrong, they are fucked. Or they pick B, and if they are wrong, they are fucked. And that is why there's such a high failure rate in trading, because they pick sides like a fucking team. This is not a team sport. You need to switch sides or be able to play both sides depending on how price action works out, because we cannot predict price action. All we can do is look at how price reacted in the past based off of human behavior, create a thesis around that and a trade plan around that, and most importantly, plan for the worst. It's the people who hope for the best and only plan for the best. Sure, they might fucking make a lucky win and hit a big win every once in a while, but eventually that same strategy is going to lead to their complete and utter failure until they finally stop using that strategy, because it does not work long term. But anyways, guys, that is a wrap for today. Hope you liked it. Let's see how this week plays out. This is a crucial week. Crucial week. Let's see where Bitcoin goes, okay? Again, the analysis is close below 61.6 or so, 61.4 on the weekly chart by Sunday. That's very, very bad news. But a breakout over 4 hour at 62,000 is a buy signal up to 66, and then potentially to the downside from there. Okay. So let's see how we do. Peace out. Peace and love. See you guys in the next one. Like, comment, subscribe. Adios, amigos and amigas.